Does the IRS think you have a hobby or a business?
Okay, so first of all, why is this important? If the IRS thinks that you have a hobby, then they're not going to let you take any deductions. If the bottom line is that as a hobby, it's okay, you're just doing something for fun and you're not serious about it. But if you have a business, then you get to take deductions. And even if those deductions push you into a loss, that's a loss you can use to offset other income. And that becomes something huge. And the thing is, it's actually easy. I'm going to go through 9 factors here, but it's pretty easy to be able to substantiate that you have a business. And once you have a business, you can go tell your employer to change your deductions because you're going to pay less tax. So it's almost like your payday is right away. You want me to just go ahead and jump into those 9 factors on that,
Sure.
Bob?
Yeah.
These are the 9 things that if you're ever asked, the IRS is going to ask about this. The reason the IRS could ask, or your state, in which case, is that they might be concerned that you keep taking a loss on your deductions, on your returns. Are you really serious? Are you trying to make money? Because that's the difference between a business and a hobby. You're trying to make money. So, how do you prove it? Factor number one, the IRS wants to know that you're carrying on in a business like manner. So, one of the things to do is set up a separate bank account for your business. Don't run it all through your personal account. Another thing that I like to do is recommend that clients get a credit card, even if it's not a credit card in the name of the business. Just like your Visa card's always going to be your personal, the MasterCard's always going to be your business. But keep things separate because that shows that although you're not getting all fancy right now and setting up a corporation and doing all that, but you are starting to run this like a business. That's a big one. Additionally, just make sure you're tracking what your expenses are, the things that are going to be deductible. The IRS has a definition that's broad. It says that anything that's ordinary and necessary to the production of income is considered a business deduction. Depending on what you do, you could have a deduction very different than I have. I'm a CPA, so I have deductions that are along the lines of computers and technology and things like that. Whereas somebody else, maybe they're working with skincare products and going to a spa could be a deduction because they want to see how these skincare products work. It's not going to work for me as a CPA, but it might work for you in your space. Depends on what you're doing. Is it ordinary and necessary to the production of income? Track those things because absolutely, if you don't track those in fairly consistently, like once a month or so, get your list together. You're going to forget them. And if you've forgotten it, you lost a deduction, you lost some money. Okay, number two, time and effort. And this is a big one in the home business space because the IRS actually has a guidebook on what they consider a business for the time and effort for this. And in general, what they're wanting to see is that on average, you would work 2 weekends a month and 2 evenings a week. That's usually what it takes to prove that you're putting in sufficient time and effort. Now, it could be that you work more weekends and you don't work any evenings, or you don't work the weekends, you do evenings, but that just gives you a general idea of what they want to see that you're really trying to make this business work. Number
Diane, sorry.
three
Can I
is,
can I
sorry, go
stop you
ahead.
for
Yeah,
we stop here for 1 second there? So
absolutely.
being part-time most of my business career, right, when I was working, is that still the measure for people who say have a job or have maybe they're caregivers for their parents or whatever their full-time gig? Is that still the
Mhm.
time frame that they want?
This isn't a hard and fast rule, but if you're meeting that, then you just checked a box with the IRS if they ever ask you. So it's a good thing to try to do that. And by the way, making working on those times, that doesn't mean you're 8 hours a day on a Saturday. It means you're doing something. You spend the morning and you're talking to a few people or doing some posts on social media or running a webinar or doing something that is helping promote in your business. That's the kind of thing they're looking at seeing. And I think most of the people in the home business space start off with a part-time business. It's a part-time business,
Right.
and they meanwhile have the full-time job. So that's part of why they came up with this.
I
It's
see.
not a hard and fast rule, but just a guideline
And then
of
how do you document it or what do you need to document to just tell it?
I think that it's a good idea maybe to keep a calendar. And maybe I'm being just like a very detail oriented CPA, but I keep a calendar of my day, like right here, and what I did. And so I have the notes. I think that might be a good idea of just track it maybe in an
Yeah.
Excel spreadsheet or on paper or something where you're using a calendar program, something that shows what you're doing and what you did that day. I see the chats that are just popping up here, and somebody just commented that it's every day in the evening, in the morning, and that's perfect. An hour in each one of those, and that's you make big progress, and you're also demonstrating that you're trying to make that work.
Yeah, cool. I love that idea of journaling, just keeping
Yeah,
a journal of what you're doing. It also helps
right.
keep you accountable. It works both. It works.
I go back and read what I was doing.
Uh-huh.
And
Yeah.
sometimes it's really good to do that because I don't know about you, but I can get dissuaded as, oh man, I've been working on this forever. But then I go back and look 3 months ago, this is where I was. And it's encouraging to
Yeah.
see that you have made progress. It's nice to
So
do that.
yeah, it serves two purposes.
Yeah.
Yeah,
Yeah.
very good. Okay.
Okay, next one is now this is the one that can be a little tough in the beginning, and it's that they want to see that you're depending on that income for your livelihood. Now, if you're just starting your business, they know that you're going to be running losses. And in fact, the IRS has that standard that they just give you a given that you can have losses for two of the first 5 years. So it doesn't mean you have to then be profitable in that third year, but for 2 years, it's hands off. They don't care. But it can run more as long as you're doing these things. You're showing you're working at it, time and effort, and you're running it in a business like manner. But if you've got some profit, that's huge. If you've had profit in a few years and then you have a loss, awesome. You've demonstrated that you are sometimes profitable. So that shows you that that's working. Next one, losses. This is number 4. Losses are due to circumstances beyond your control, or they're normal for your type of business. So this actually goes a long ways with the home business industry because generally it takes a little bit to get going, but it's like a snowball it's going down a hill. It just builds and builds. In the beginning it's small, and they recognize that. So your argument here is this is common for the industry. I'm doing the other things to try to make it grow. um, Next one, factor number 5, is if you've got losses, this is after you take all the deductions, are you doing something about it? Are you trying new things? Are you checking with others? Do you attend events where you learn more about your business? Do you read? Do you take courses? Do you talk to others in that space? Are you making changes to try to be better? And I think that's an encourage one. They don't
Yeah.
care really so much about what your results are, but are you trying to do something different?
So this would be
It's
like
not
hiring a coach or joining a mastermind, that kind of thing.
exactly right. Going to an event, doing something like that that kicks you out of the space you're in. Those are all that just solve factor number 5 right there. By the way, you don't need to pass all 9. If they look at this, they're going to look at where the most of the preponderance of the evidence, as they say, that you have, that you're showing that you're demonstrating that. Number 6, do you have advisors or coaches or mentors that have that are going to help you have a successful business? If you've never had a successful business before, do you work with somebody who has? That goes a long ways. And are you listening to them? Are you trying to do new things? Just kick you out of where you are. Number 7, have you been in past businesses that are similar, maybe not the same, but you've had past successes? So you know what it means to run a business, or you know what it means to market, you know what it means to meet other people or to build a group. Do you have these skills and you've shown in the past you can do those? If so, track that because if you're asked, that's something that'll come up. Number 8, and I think somebody asked this at the very beginning, if your business what if you've got profit for a few years, then you don't for a few years? Should you still file it as a business? And the answer is absolutely. Number 8 is, hey, if your business had a profit in the past, then having losses in the future demonstrate that maybe it's a condition, something's happened, but you've got a good chance of making a profit again. That's a business. Businesses have ups and downs, and that's how it works. And then the final one, which is an interesting one, I don't know if it's applicable here, but you can actually have a business that runs at a loss for a lot of years if the idea is that there's a future profit from the assets in your activity. So I'm not quite sure exactly how that might work. This is the one that the internet guys all use to because they're building a business and it's going to have a lot of losses, but down the road it's going to go public and we're going to make a bunch of money. Or maybe you're running real estate and you're buying it and you've got a bunch of losses. Someday you'll sell it. Or you're building a business that's going to have assets that are more intangible. You're going to have connections. You're going to have downlines, or that could be used with other reasons. So if you've got other assets that you can prove, and I don't mean to make it sound like people are assets, that of course
Right.
we care about the relationships, but the fact is that these are what make solid businesses in the future.
Yeah.
So those are the 9 things.
My question, I've always heard, I don't know if it's a fallacy or not, but I've always heard that even if you're a solopreneur, you should hold quote unquote business meetings and document, have minutes of the meetings, even if it's just you and yourself, right? Going
Okay.
reviewing your business. Is that a good idea?
I think it's a good idea from the management standpoint. Now, if you do form an LLC, a limited liability company, and you are running that, in some states, you're actually required to have annual meetings. Now, the interesting thing about the annual meetings is the cost of that meeting is something that's a legitimate business expense. And let's say it's you and your spouse and that are both in this business, and we're going to go have our business meeting at Lake Tahoe,
Hmm.
and because I'm from Nevada, and so you've got now a cost there as long as you're holding the business meeting there.
Right.
So that's
Right.
a deduction. Yeah, in general, yes, and it may be required in an LLC. It absolutely is required if you have a corporation. You are required to have business at least annual meetings. You can have them more frequently.
Okay. And Wendy just dropped in the chat. She's in network marketing. What if you have
Yes.
5 years of losses in a row?
Okay, so in that case, the question is going to be, are you following the other factors? I went through them really fast, but some of the things I would look at is, are you doing it in a business-like manner? Are you putting in the time and effort that's needed? Are you talking to an advisor or mentor or coach, or you're in a mastermind group, or you're doing something to try to get better, that you get better results? And in the past, have you had success in other businesses that could transfer there? Those are the kinds of things that if the IRS were to try to challenge it, I would look at that and point to those things. Hey, I'm trying here.
Yeah, it's funny. I see that a lot in network marketing. I think it's because it's a very low barrier to entry, and
Yes.
people who maybe wouldn't normally start a business have a chance to start one, which is good. But I think a lot of people come in there like I did, very unprepared,
Hmm.
very with lack of skills, and it takes some time to learn those skills and make money and make profit. So I know where Wendy's coming from because I was in the same boat when I first started. I was almost afraid to claim a business because I had 5 years of losses in a row, and I'm like, are they gonna come after me if I do this? And so I
You know,
understand her question. Yeah,
we had this conversation before we took it live to everyone, but I think that's one of the best things about the business and the industry you're in is I believe a lot of people are waking up to the idea of, my job isn't going to cut it. I need to do something else." And if they go out and start their own business, they're going to have to find a product and manufacture it and inventory it and ship it and deal with all these logistics plus market it. The business you're in is training you how to have a business and how to do marketing, which are it's almost like it's a stepping stone to being able to do something else. You may stay there and build this and be and do that, or you may take it somewhere else. But you're going to pick up skills that I
yeah.
think that's the one of the biggest assets that you're growing here.
So interesting you say that because almost every leader in our industry that I know started in network marketing and then
Yeah.
moved on from there. So
Uh-huh.
absolutely, I agree with that. Another question I know is going to come up here. I haven't seen it yet, but a lot of the people who attend these or watch the recording are from Canada.
Okay.
Same rules apply or
Oh my goodness. I have a friend who's Canadian. I should have checked with her first, a Canadian accountant. Um, I honestly can't answer that. The Canadian laws are very similar to the US laws, but as far as what they're going to look at, I'm not positive on that
okay.
one.
And I think you say this to everybody who watches this, check with your own accountant,
Right.
your own tax
Absolutely.
person.
Yeah.
Because just because we say it here, make sure that it applies in your state where you are, or in your country if you're in a different country. So for sure, I think that's always good advice.
I would say that no matter where you are, whatever country you're in, start really practice having good records and
Yeah,
journaling what you're doing because that's going to help you no matter what country you're in. It's going to help you
yeah.
with your business.
So Chanda came, she sent me this. She couldn't come tonight because her son was at a soccer game, but she sent me this question, and I think you answered it, but I just want to make sure we hammer it home. She's asked, at what point, I think she's in direct sales, what point should she be claiming as a business? She said she has a few companies, has been claiming them so far as a business, but she's not showing a profit, like the same similar things we were talking
Right.
about.
Yeah.
one business feels more like a hobby. Should I stop claiming that one business?
If I had one that felt like a hobby and I wasn't really working it real well, I would probably cut it loose. And if you want to continue doing it as a hobby or whatever you're doing with it, but my concern is that if the IRS or the state came in and looked at that and they saw this and go, "Hey, wait a minute, this isn't really qualifying." The others probably aren't either, and so they're tainted by the bad apple. I would just focus on the ones that you are running like businesses, and those are the ones you claim as a business. The one that's a hobby, enjoy it.
And another question I saw come in before was, at what point do you incorporate?
Generally speaking, first of all, if you have any concern that you might have some liability, and that could be liability that comes from the business, something that's happening and you get sued personally, or it could even be you're building up this asset here and something happens in your personal life and somebody sues and tries to take your business away. I would say an LLC at the minimum is most people would do that. I know you're in Florida, and Florida has some unusual laws regarding LLCs and asset protection. They don't like single member LLCs. They want to see more than one person, and your spouse doesn't count. It's a little more problematic if you're in Florida. Other states, it's a lot easier to have an LLC. It doesn't cost a lot usually, and it gives you some asset protection. Now, the other advantage with an LLC is an LLC can elect how it wants to be taxed. And so, if let's say we're at the end of September, let's say I'm meeting with a client who's got an LLC, and all of a sudden this business is just taken off and there's a whole bunch of profit, we can elect corporate status back to January. And so it's almost like I couldn't do it. I couldn't form a corporation for you right now and let you take it back to January. But if you have an LLC, we can elect and do it backwards.
Got it.
Generally speaking, the corporation, it's all based on taxes. So it just becomes numbers, which is going to save you the most in taxes. I'm going to just throw a number out here. If your profit is running, say, $40,000 to $50,000, probably that's the point where you need to be incorporated as an S corporation or an LLC that's elected to be taxed as an S corporation. It's an easy question to answer if you've got the numbers because it's just an equation, which is going to save
Gotcha.
you the
It's
most.
more numbers driven.
Um,
Yeah, yeah.
yeah. The other advantage, though, is corporations are much fewer audits. One out of 100 less. It's like that much of a factor. 1% of them are audited versus what the sole proprietorship might be.
So we're running toward the top of the hour here.
Yeah,
Here's
okay.
probably the question that most of these guys haven't even thought to ask, but they should ask. What are some of, in your experience with home business, and what are some of the things that people, assuming they are claiming it, their business as a business, right? What are some of the things that maybe people don't claim or don't think about claiming that they should?
Okay, so a lot of people talk about the home office and to take that deduction. The challenge you might have, and I'm not saying not to take it, but if you're running at a loss, the home office expense just becomes, it rolls forward. It can't create more of a loss for you in your business. Still, you might take it. But the other things that I see people miss are their cell phone, their computer, their ISP, internet service provider, all of the technology that they're using, and chances are they're probably using a lot. Meals, if you are discussing business, and that could be with somebody who you might be working with, it could be your coach, it could be, you could take your accountant out to lunch and take the deduction. There's those, they often miss those things. And this is a crazy one that I just recently went through with a client, just office supplies. And she said, there's not that many. I just buy them personally. And then she said, you know what? I'm going to go back and look. And she had $8,000 worth of supplies she
Mhm.
bought. Pens and note paper adds up, apparently. And, at a tax bracket, that could be $4,000 in tax savings. So,
Yep.
if you live in California. But the fact is that just keeping track of where are your expenses going. I think the thing people miss the most, though, is probably their cell phone and their cell phone bill. It's
Right.
very easy to take that. It used to be that you had to divide between business and personal use, and you don't anymore. If you use it at all for business, the whole thing's deductible.
You don't have to have a business phone per se.
Nope, nope.
That's
And you
good to
don't
know.
have to track hours and divide it. Same with your computer. As long as your computer is used for business, you can also use it for other things, as long as you're using it for business.
And now I know that going to events is deductible.
Absolutely. Yep.
And what about if you drive to that event? Is that mileage still deductible?
Yeah, that mileage would be deductible. Absolutely. It's
Okay.
67 cents a mile right now this year, 2024. Or if your vehicle is used a lot for business, then maybe you want to take a percentage. So if you use it 60% for business, then 60% of your gas and your licensing and your maintenance, all that stuff would be deductible then.
This is so fascinating, this stuff for me. I'm sure that I have a really good tax person who catches a lot of this stuff, but I'm gonna check to make sure she's taking everything now.
I think the biggest thing, and just in defense for all the tax professionals out there, is we're only as good as the records our clients have.
Yeah.
Because, at the end of the year or whenever we get these lists, and sometimes it happens that our clients don't tell us what they're doing and we don't know what to ask because they haven't told us. And I'm a big one on education. And I think that's up
Yeah.
to the taxpayer. Learn as much as you can.
She told me that I'm one of her favorite clients because I'm really like I document
Organize.
everything. And Wendy asked for audits, is there a difference between an LLC and S Corp? Either one more likely to be chosen to get audited.
Okay, so an LLC is a funny animal. An LLC doesn't have a specific tax return. An LLC that is just formed and hasn't elected how to be taxed is going to just show up on your 1040. You can elect to be taxed as an S corporation, and then it looks just like an S corporation. So depending on how it is regarding audits, the S corporation is probably the one you're least likely to be audited.
Oh, good. That's what I
Yeah.
have. Good to know. Good to know. All right. So we're top of the hour. Any final things you want to tell these guys before we jump off, Diane?
We're in mid-September here. I would recommend in your spare time and when you have nothing else to do, or maybe you should make the time, is to get your books up. How much have you spent so far this year? Get your records together because pretty soon you're going to need to give those to a tax professional, and the more information you have, the better it is for everybody.
Yeah. And I remember there were years where I waited till the very end to put everything on a spreadsheet. I had all these scripts, pieces of paper everywhere,
Oh gosh,
and
yeah.
yeah, the whole shoebox thing. I don't do that anymore, thankfully, but I now have my schedule is every month on the first of the month,
Hmm.
I do all my financials and I
See,
catch
that's
up.
so smart. And you can remember it then because
Yeah,
6 months from now, you're not going to remember.
exactly. Exactly.
Yeah,
People want to get to know more about you. Where can they find you?
sure. Okay, so my website is US Tax Aid, and that's AID.com. I have blogs that I post there. If you click on there, you see how can you ask a question, and there's just different ways to get hold of me. We've got 6 more weeks, or sorry, 6 more weeks, about 6 more days of tax season left, and then I'm going to be writing some books. In the past, I write tax books, and so I'll definitely let you know when I have some out.
I neglected to mention that you're a New York Times bestselling author.
Yeah, I was very fortunate to be part of a group. I was part of Robert Kiyosaki's first Rich Dad group.
Were you
And
really?
so I had a book that was part of that. I had actually two books that were part of that, and one of them hit New York Times bestseller list,
That
which
is very
is
cool.
exciting. Yeah.
Really exciting. Wow.